You've survived multiple bear markets and multiple crashes in your investing career. Now, this time, how do you compare this to 2008? Very similar on the periphery when we look at it, banking collapses. Is it the same? Is it different? What do you think?
Well, I would suspect that this one would be the worst in my lifetime, therefore your lifetime, because the debt is so much higher now. I mean, America's the largest debtor nation in the history of the world. Look at Japan. I mean, the debt is staggering, goes up every day. So we have huge debts in the world. We've never had anything quite like this in history. So it's got to be pretty horrible.
I think
with inflation rising and the threat of a recession looming, protecting your wealth is more important than ever. That's why I want to introduce you to Augusta Precious Metals. Investing in precious metals like gold can safeguard your savings, offering stability when traditional assets falter. Augusta Precious Metals makes it easy to diversify your portfolio, providing peace of mind in uncertain times. If you're ready to take the next step in securing your financial future, check the link in the description below or call 855-444-7022 to learn more about how Augusta Precious Metals can help protect your wealth.
Quite like this in history. So it's got to be pretty horrible.
I think when
I don't say that with any joy, David. I have to deal with facts.
No, we appreciate your candor. I think people listening to this would like to know how to survive in case the markets do turn south. Now, how did you outperform the markets by such a significant percentage in the 1970s, especially towards the end of the 70s when we had very high inflation back then? Now, I wasn't around. I read about it in my history books, of course, but today we have relatively high inflation, not nearly as high as the late 70s, but people have compared today to the late 70s. And so my question to you, Jim, how does one outperform the markets in a high inflationary environment?
Well, it's the way you always outperform the markets, and that's just stay with what you know. Don't listen to other people. Figure out what you know a lot about, and that's where you put your money. I mean, if you listen to other people and something goes wrong, you don't know what to do because you don't know why you bought in the first place. But if you only invest in what you know what to do if things go right and if things go wrong, and you will still make mistakes, but you'll be ahead of the game.
What, in your opinion, was the reason we have so much debt in our economy? Why is it that the governments need to continuously take out more debt? And of course, corporations as well. Corporate debt is at an all-time high, Jim.
Hello, David. If you can solve that problem, wow, they'll be writing books about you for centuries. I think the real reason is because what happens is countries get successful, and they start thinking that things are easy, and they just buy more debt, get more debt. And since everything is going right, people will lend them more money. And it's human nature. Is it good? No, of course it's not good. It always ends badly. But we're on that same cycle.
Hey everyone, welcome back to your Gold IRA guide. Today, we're diving into some powerful insights from legendary investor Jim Rogers on how to navigate and overcome a recession. Whether you're an investor, a business owner, or just someone looking to protect your finances, this video is for you. So, let's get started. One of the first things Rogers emphasizes is diversification. In a recession, certain industries and markets will be hit harder than others. By spreading your investments across different asset classes, like stocks, bonds, commodities, and even geographic regions, you reduce your risk. Rogers is particularly bullish on commodities like gold and silver during downturns, as they tend to hold their value when other assets are declining. Another important piece of advice from Rogers is to stay liquid. In a recession, cash is king. Having liquid assets means you can take advantage of opportunities as they arise, whether that's buying undervalued stocks or investing in distressed real estate. With inflation on the rise and economic uncertainty becoming the new norm, it's crucial to find ways to protect your wealth. That's why I want to talk to you about Augusta Precious Metals. Gold and silver have historically been safe havens during turbulent times, and Augusta makes it easy to incorporate these assets into your investment strategy. To learn more about how Augusta Precious Metals can help you secure your financial future, just click the link in the description or give them a call at 855-444-7022. Don't wait. Protect your wealth today.
But I'm still waiting.
So, based on your experience going through several, I guess, market crashes and recessions, I think you're saying that there is a possibility that you don't feel that major euphoria that you felt in, let's say, the dot-com bubble or 2008, 2009, I guess.
It doesn't feel to me the same, as powerful and as out of control, as hysterical as it has been in the past. But who knows? Bull markets, they don't sit down and write a book and say, this is what happens at the end. I wish it were that easy. It's never been that easy for me. Let's put it that way.
The other thing that I was curious, since you brought this up, I wasn't investing in 2000 or 1999, but I hear that a lot of people, and you see the data where in the dot-com bubble, there were a lot of companies with the dot-com that didn't have revenues, didn't have net income, just had visions. And if you had that .com in your name of the company, the stock was skyrocketing. But right now, I think the hype is around artificial intelligence. But if you see the stock price going up, and if you look at the, let's say, the earning calls or see their revenue and net income, it's also actually going up as well. Do you think there's a difference between the hype right now and the hype that we saw in the dot-com early era?
Well, it's always different. Yes, it's always different. But having said that, I mean, I can remember in previous, I think it was probably the late 60s, companies would change their name to put computer in the name, and the stock would skyrocket it. It didn't matter if it was a laundry. You know, if you put your name as Smith's Laundry, Smith's Computer, the stock would go through the roof. So, I mean, this has all happened before. At least hysteria and bull markets have happened before. I hope they always happen. And I hope I'm smart enough to know when to get out and to sell short.
Well, talking about the Fed, so I think the Fed has kept saying that they are on track with a soft landing and that inflation is in process of being taken care of, and have shared on the most recent FOMC meeting that they may have a rate cut later this year. But I was looking at the past pattern of the market, and based on the past history, whenever the Fed has pivoted their policy and started cutting rates, there has always been a market crash followed within a year or so after the rate cut. Now, once the Fed starts cutting the Fed fund rates, either this year or next year, do you personally think that the market will be in a recovery mode as the Fed says, or do you think that it will be the beginning of maybe a major market crash?
Andrew, I have learned not to listen too much to the people at the Fed. They're just bureaucrats and academics. You know, they're trying to keep their jobs. They don't care about your job. They don't care about my job. They care about their jobs. And they're trying to keep their jobs. So I have learned not to pay too much attention. You have to listen. You have to know what they're saying. But they don't know any more than I do. They don't know more than most people.
I think the major goal of the soft landing of the Fed saying is that they're going to drag down the inflation and not, increase the unemployment rate and not cause a recession and then have a recovery of the market. But it seems like you're saying that we need a hard landing to happen for a reset for this market.
Andrew, I will tell you that over my years, I have learned that I have to decide. I can listen to them as input, but they do have influence and some power. But I have learned that they don't know any more than you and I know.
There's a lot of investors that have sold their stocks last year, assuming that there would be a market crash. But due to the market bull rally, they have missed out on the opportunity of quite substantial gains being out of the market while the S&P was going up, I think like 25% more. Would you have any advice for these investors that are on the side right now and sold last year and have missed these gains at this point, whether they should keep waiting on the side for better opportunities or major pullback, or do you think they should start investing since we still have the bullish momentum in the market? And also, if you also had experiences missing these great opportunities in your career and how you actually overcame these misses.
Oh, Andrew, I've made many mistakes. We could have 2 or 3 or 10 shows about my mistakes. I hope everybody's made a lot of mistakes, and I hope I continue to make mistakes, because that's the only way I'm going to have any success. No, I don't like missing a move. I certainly don't like making mistakes, but I know what happens. But I think I've learned that if you've missed something, the answer is usually not to say, okay, I'll jump in now. I'll make up for it. That is historically, for me, not been a good way to do it. The way that I have found is wait until I myself think, okay, I missed that one. Now here's another one. Wait until you yourself think you're right. But everybody has to do it their own way, Andrew. I wish this were easy. I wish all we had to do was look at page 37 and get the answer. There is no page 37. There is no chapter 4. I wish there were.
In a decade. Now, do you still think that we will have a major market crash in the near future? Or do you also agree that we might have had that crash in 2022 and are in the first inning of a new bull market rally?
It really doesn't matter what I think. The market will tell us what's going on. I do know that 2009 or 2008, 2009 was bad, and this has been the longest period in American history without a major disaster. Maybe it's going to last 50 years. I don't know. It never has. Washington says, don't worry, everything is okay. Well, I know not to listen to Washington. But, Andrew, I have not started selling short. I do not sell short yet, but I can see that there is euphoria building. I see that many people, new investors are coming and saying this is wonderful and it's easy. These are signs that you see near the end, but I am not selling short yet.
Is this type of pattern that you're seeing?
Jim Rogers also talks about the importance of investing in yourself. During a recession, jobs can be scarce and the competition can be fierce. By upgrading your skills and knowledge, you make yourself more valuable in the job market. Finally, Rogers encourages having a long-term perspective. Recessions can be scary, but they don't last forever. By staying focused on your long-term goals and making smart, strategic decisions during tough times, you can come out the other side stronger. Rogers often reminds us that the best opportunities arise in the worst times. So keeping your eyes open and your mind clear is crucial. So there you have it, some valuable insights from Jim Rogers on how to overcome a recession. Remember, it's not about avoiding recessions but about navigating them wisely. If you found this video helpful, don't forget to give it a thumbs up, share it with others, and subscribe for more financial insights.